What is going on, investors? Hopefully guys are doing well out there. That is right. It is Friday. It is time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news of the week, plus the technicals from the major FAANG stocks. And did these FAANG stocks hold their technical levels? Are we at levels of support? Can we come in here and buy the dip? Did I buy the dip on some of these stocks? We'll answer those questions and more on today's show. Let's kick things off like we always do with Facebook. Started the week at $320 per share, ended the week at about $331 per share. The Congressional January 6th committee has subpoenaed Meta, Google, Twitter, Reddit, and pretty much anybody else in Washington. And so this group is being thrown in there for their potential involvement, not in January 6th just last week, but January 6th of last year. Facebook loses a bid again to throw out an antitrust case brought forth by the FTC. I just find this incredibly crazy that the fact that the FTC is complaining that Facebook has a monopoly based on approved acquisitions of Instagram and WhatsApp. So they're going back on that and saying now they have a monopoly, despite the fact we reported, I think it was last week or the week before, TikTok. TikTok, a site that hasn't been around that long, is now the world's #1 website, supplanting Google, which had held that really that title for a very, very long time. I don't know how big of a case they have. I'm not a lawyer. We'll see how that works out for Facebook. Microsoft is losing AR talent, that's augmented reality talent, to Meta's platforms. This is for the Oculus, this is for the metaverse, and then those types of things. And look, talent in the Silicon Valley is passed around like a really pretty girl in Hollywood. I hope that didn't offend anybody, but essentially that's what's happening. So you have talent that works at one company, they get a little bored, they get a little disheveled, their stock options vest, and so then they go work for another company. It's not really that big of a deal. You see talent move around, but it does say that Meta or Facebook has a compelling offering that is drawing in the talent, that draws people that want to work on these things, because it's more than the money for a lot of these people. It's more than just being able to put on your LinkedIn profile that you work for a Microsoft or a Facebook. It's actually what you're working on. And I think people are excited about what Meta is trying to develop with the metaverse and the Oculus. In this case, the Oculus is facing, speaking of the FTC, speaking of probes, well, the FTC is facing a probe on Oculus into some kind of antitrust, anti-competitive complaint. I mean, the FTC just will not get off these companies' back. But again, I'll say it week after week. Nancy Pelosi, who's the head of the dominant party in Washington, she's buying stock options in a lot of these companies. We have yet to see anything remotely concrete or anything objective against these companies, from a law, from a fine, a violation, any of those types of things. Nothing has happened yet. It has all been lip service. It has all been noise. I think this year will be telling, because if you don't get it done this year, I think it's going to be tough based on the poll numbers that we're seeing and the potential outcome that we'll see maybe next November. Long ways away. We'll see what happens. Moving on to Apple, started the week at 169, ended up nicely to 173.07. Apple is delaying their AR/VR device amid development hurdles. They're having development hurdles on the battery technology, on the software. The other thing that I think about with Apple is they don't want to put something out that maybe is a little bit too early. Think about the product that they put out a little while ago. It was called the HomePod. It was a $300 or $400 speaker. It was basically a more expensive version of like an Alexa, which costs like maybe $99. What Apple ended up doing is they put out a HomePod Mini, which was a much smaller speaker, for only $99. It's actually a product I use and I actually really like, attached to my TV. It gives you kind of surround sound for just $99. But they put out this HomePod and it wasn't well received. It didn't sell well. And I think Apple is cognizant of that as well. I think some of this is product related, but look, they could put out like the best AR VR headset ever. Like, okay, it could like take a dump on the Oculus, but if there's not that many compelling games to put on it, if people aren't really comfortable with that form factor and really want to use it, well, it wouldn't matter, okay? And so I think Apple is also thinking about those types of things as well. Now, Apple gained market share as Macintosh computers grew twice the rate of of PCs in Q4. We saw that Apple shipped about 7.8 million Macs in the fourth quarter. That's up 9% over the previous period. It had an 8.5% total of the PC market. That is up from 7.9% in the previous period. For the full year, Apple shipped 29 million units of their Macintosh. That's up 28.3% compared to the broader PC market, which saw gains of just 15%. So the entire PC market grew just 15%, while Apple's PCs grew 28%. And I've been saying it on this channel. What is it due to? It's not the fact that these are the cheapest computers. It's not the fact that they're the best from a software perspective. It's likely due, number one, probably to marketing integration into the phones, but number two, these M1 chips, if you do any amount of research onto them, I'm recording this show on actually one of their more upgraded M1 chips. It could be almost an M2 chip. It's look, these are fantastic. And look, I get comments all the time on my channel from gamer nerds and guys like that run these souped up gaming PCs that need to be liquid cooled and have 10 different fans. And if you're in Arizona, the darn thing might catch on fire because it gets so hot. Well, most people don't use a computer in that sense. They need to type, they need to watch videos, they need to edit videos, they need to edit photos. And there is nothing better on the market at the current time than Apple's PCs, and the sales numbers are starting to back that up. Now, Apple is in talks with Major League Baseball, which is currently, I think, on a labor strike, so hopefully they get that worked out. But this is to broadcast midweek games, which would not be exclusive to Apple. So, for example, if you're in the Yankees market or the Texas Rangers market or the San Francisco Giants market, your game is typically aired on some kind of local, maybe NBC Sports, or maybe even the Yankees own network. But then sometimes those games are picked up by a national. In the past, it used to be ESPN. They dropped that ability to show those games. They decided not to renew that contract. Now, Apple has plenty of money. And I actually think, just a broader talk here, I think in the next couple of weeks, as we move through the NFL football playoffs, probably by the time we hit the Super Bowl in about a month, we'll find out who the next carrier for the NFL Sunday Ticket, which goes one more year on DirecTV next year, and then it will get passed on to somebody else, more than likely not DirecTV. My guess is a tech company like Apple, like Amazon, because I think what we're finding is, number one, these companies have absolutely no use for cash. They cannot complete acquisitions because they see what the FTC is doing to Facebook. They're going back on acquisitions that they made basically a decade ago and calling the company a monopoly. So they don't want to use the cash for acquisition purposes. Okay, they've bought back a lot of stocks. They paid a lot of dividend. Well, the only companies that have a lot of cash and have the ability to pay up for these leagues, well, it's these tech companies. It's Apple, it's Amazon, and maybe Netflix to a certain degree, but they haven't really decided to get into this market in terms of live sports. I like this move. I love any use of cash that these companies use. I like it. Okay. Will this be profitable? Will this really drive a bunch of people to Apple TV? I don't know. I just like this a heck of a lot better than just having that money sitting on Apple's balance sheet depreciating. Okay. We just came off a year where you had 7% inflation. Okay. Guess what? Apple's cash just went down in terms of buying power by 7% over the last year. And any economist is going to predict we're going to see similar type things this year. Okay. From an inflation perspective. So I like that these companies, well, they have money burning a hole in their pocket. And I think NFL rights, MLB rights, NBA TV rights, I think those are worth buying. Moving on to Amazon, start of the week at $3,171, held in there. Man, you could buy this one. Okay, $3,242 per share. Amazon workers in Alabama get another chance at unionizing. So it looks like they held a vote. We talked about it here on the show when it happened. They held a vote, I think, in Alabama, and they decided to get struck down, but it looks like probably Amazon did a little shady business trying to influence the vote. It looks like maybe they did, maybe they didn't, but it looks like we're going to get a revote essentially on this, and we'll see if the workers in Alabama that work for Amazon will decide to unionize. Amazon Amazon is the top FAANG stock of Bank of America as headwinds should ease in 2022. I could bring up a dozen notes on this, okay? I've seen analyst after analyst line up behind Amazon. I think part of it is the fact over the last year, the stock's basically gone sideways. It's gone nowhere, okay? For over a year now. And so it would make sense that as they grow into that valuation, it starts to make a little bit more sense. And then, yeah, if you get the expenses from related to the pandemic, related to building out fulfillment centers, related to your fulfillment network and your transportation delivery network, well, you get some of those capitalized costs out of the way, and then maybe profits or at least revenue growth can start coming back into the company. Absolutely. I think this company can be a major, major winner. We'll find out here in a couple weeks. I'll tell you the dates of the earnings, which have moved around in the last week. So I'll give you those here as we get to the technical segment of the show. Amazon and TikTok will be the big winners in the ad market share. Just another example that I think Facebook is going to be able to bring to antitrust regulators, showing you, well, look, in the online advertising space, you got Google, which has a dominant position. You've got TikTok, which is really emerging. And since they're the number one website, I can imagine they're generating a fair amount of ad revenue at this point. And then you also have Amazon and, a number of other players out there. Moving on to NVIDIA, start of the week at $262, end of the week relatively flat at $269, hung in there. From a technical perspective, this one's actually really interesting. We'll talk about that here in a second. NVIDIA fell 5% earlier in the week. I think this was Monday, as the chip maker touts its ARM deal benefits. You wouldn't expect them to do anything else. We've seen analysts put the odds of this acquisition in terms of NVIDIA acquiring ARM in I think $40 billion. I got my billions of dollars messed up. $40 billion acquisition that NVIDIA is trying to complete. But here in the United States, they basically essentially put the kibosh on this. We've seen the UK, we've seen China weigh in. We've pretty much seen every regulator weigh in. NVIDIA's, I think, trying to throw a Hail Mary here, knowing that they're running out of time to convince regulators that that deal is a good idea. Now, Fortnite is back on the iOS, Apple iOS. No, not natively, but thanks to NVIDIA's, they call it a loophole, but they basically have this GeForce Now service, which is essentially a software of a service. It allows a subscription service for games. So it allows you to subscribe to GeForce Now and then access games like Fortnite through the Safari browser. So if you're a fan of Fortnite and you're on an Apple device, you're still able to play the game to a certain degree. Moving on to Google, start of the week at $2,680. This one you certainly could have picked up this week on a buy the dip opportunity. End of the week at $2,787 per share. Google misled publishers and advertisers as the state lawsuit alleges. This is a complicated thing. It looks like they tried to drive up prices. As somebody that buys a lot of ads on Google, I was on the phone with them this week and I made a couple changes, and an hour later I had spent $1,000 like in an hour, which is really weird. So yeah, they try to drive up the price, and Google has gotten so complicated. The way to buy the ads used to be so simple. Now it is so complicated. I can see how one little change, one little tweak here, allowing the algorithm can do something, can really drive up the price. I feel you have way less control than you did in the past. So I think regulators probably have some beef here, but I don't necessarily think it's going to change Google's business model or hit their bottom line or their top line in any meaningful degree. Returning to the office, Google scoops up a London site for $1 billion. We noticed, I think it was a couple of weeks ago, that Google bought a site, I believe it was in New York City, for about $1 billion. So Google's using some of their cash. We talked about how Apple's using that to buy rights to maybe potentially the MLB, maybe even the NFL. Well, Google's kind of doing a similar type thing, but they're doing it in real estate, which I don't mind either one. I probably, maybe from a longer term perspective, I actually like this real estate play. Not that it would necessarily add a lot of value of, from a shareholder perspective, but look, instead of that $1 billion sitting on Google's balance sheet depreciating by 6 or 7%, whatever inflation is going to be this year, well, look, they get to add it to a property, some real estate, and that certainly has a way of fighting inflation to a certain degree. Moving on to Microsoft, start of the week at 308. It dipped, it dived, it moved up, and ended the week at 310. I'll talk to you about if I bought the dip on that one. If you follow me on Instagram, you probably know what I already did. Microsoft stopped making making Xbox One consoles. There was a previous generation to focus on Microsoft Series X and S devices. We actually saw, I don't have the article up here. I thought it was interesting. I saw something PlayStation. They're actually doing the opposite. Instead of focusing on the PlayStation 5, which they're having trouble kind of getting out to the market and having enough supply of that, they're actually making more PlayStation 4s, whereas Microsoft is actually doing the opposite. They're actually making less, or basically stop making the previous generation, and they're only making the current generation consoles, which are still selling tremendously well by all accounts. Microsoft acquisition of Nuance is being investigated by a UK watchdog. So it's interesting. So I think we talked about this last week. This Nuance deal, which I think is a $20 billion deal that Microsoft completed, or they say 16 here. I think it might have some earnouts or maybe some stock-based compensation. But look, it's interesting. So this deal was already approved or conditionally approved in the United States, by the EU, by some other places, but now the UK, I think the way these governments, I think they're actually pretty smart. The UK is probably seeing, hey, we're the last hurdle in this race. So Microsoft's going to want to take it over the finish line. So Microsoft is going to go to the UK and just grease the palms of all these politicians, and whatever they want, they're going to be able to get, because again, Microsoft knows this is the final hurdle essentially to get this deal done. Microsoft has a lot of cash sitting on its balance sheet, just like we've talked about these other companies. They have no use for it, but if they can complete an acquisition like this, certainly can be beneficial for not only the company, but shareholders as well. Moving on to Tesla. Start of the week at $9.90. Boy, you could have bought it there probably. End of the week at $10.49. Held nicely. Man, this stock is holding in there. Dogecoin climbed as Elon Musk says it can be used to buy Tesla merchandise. Well, so what I think will be interesting is not that this will generate billions of dollars. We might hundreds of thousands, I think is probably where we would be with something like this. I could be wrong about that, but will be interesting to see is how Tesla converts this. Do they hold the Dogecoin on the balance sheet? And it might be such an insignificant amount we might not find out, but do they hold the Dogecoin, or do they convert it to Bitcoin, or do they convert it to cash and put it on the balance sheet? We'll see what Tesla decides to do, and we'll see if any analysts press them on that question. Tesla's Cybertruck's arrival might be pushed out to 2023. These were expected sometime in 2022 as production neared, but we're seeing Tesla take language off of their website while essentially removing a date. It used to say 2022. Now it does not say any date. They made a little bit of a mistake in this article, and I want to make this clear. They say that the Cybertruck is expected to have a range of 500 miles and it's expected to have a price tag of $40,000. You see me shaking your head. There is no EV that is going to come to market anytime soon with a 500-mile range at $40,000. I tell you what, if Tesla can produce an EV with 500 miles of range for $40,000 and make them en masse, this company is wildly undervalued. I mean, I'm just going to call it how I see it, okay? This is going to be an $80,000, $90,000, $100,000 pickup truck. And believe me, people are going to line up, including myself, who has a pre-order for this. I will buy the first one I possibly can get my hands on, even if it's $80,000 or $90,000. I actually think it might be worth it. Tesla's China-made car sales are up 34% month after month to do 70,847 units in 1 month in China. For Tesla is absolutely fantastic. Last year during this time, they delivered 31,732 cars. This is just in China. Tesla is basically beating the vast majority of the industry just in China, not counting Fremont, not counting other gigafactories, which we'll talk about here in a second in related news stories. Tesla signed a landmark nickel supply deal with Talion Metals. Obviously, Tesla needs a lot of raw materials to manufacture these batteries in these cars, and nickel is just one of them, and it looks like Elon Musk has secured a large supply of that. Certainly will be helpful for Tesla and its supply chain. Tesla land approval to build more Model Y vehicles in its Germany testing. They received approval for 2,000 Model Y bodies to come out of the Berlin factory. This is for testing purposes. This is all a prelude for the factory finally getting approved. We have to figure it used to be Q4 of last year, used to be Q3 of last year. Now there has been some delays on both ends. We're not going to just blame the government of Germany, but it also has been on Tesla's side as well. Okay. But eventually this will get online, and you see the success with these factories. Okay. And I don't know if they'll necessarily get to this level in terms of production to meet China's 70,000 units in a month. I mean, that's unbelievable. Okay. But it could be that these factories get online very soon, and all of a sudden Tesla delivers a far more amount of cars than expected during the upcoming year, which I've seen as high as 2 million units. But when you're doing those types of deliveries out of China, and then if we can get Berlin online, and then finally if we can get the Austin, Texas, which looks like it's going to expect to start producing Model Ys in the next couple of weeks, again, this would be extraordinarily bullish for Tesla, because I think a lot of people are basing their valuation off simply the Fremont factory and the China factory, which are pretty much at full production. They need to get this Austin and this Gigafactory that will allow them the scale and the ability to start delivering cars even cheaper to other parts of the world where they're having to pay freight and shipping and to move these cars around the world, where they're getting them closer and closer to the customer. The other thing this will allow them to do is product expansion. We'll see that Cybertruck roll out of the Texas facility, but the first thing is first, they need to start rolling these Model Ys out to customers. Moving on to the technical segment of the show, kick things off with Facebook. They report their earnings around February 2nd. I put a big green line in here on Facebook. This is a hard level of support. I've changed the colors of the line. I tried to make the ones that I think are really critical. I tried to make them really thick so they really stand out. But right now, we take a step back on this. This stock is locked in an uptrend. Again, when you see CNBC saying market turmoil, when you see these guys on YouTube who I adore, who I think are absolutely fantastic, who have more subscribers and more viewers and more viewership than my channel, they're out here saying the market's going to crash, the market's doing this, the market's doing that. Take a step back and breathe, guys. Do a max view on the chart and just see with Facebook, we are still locked in an uptrend on this one. Okay, until you take out the previous lows, which I have marked here by this thick green line, until you take out these lows, this stock is in an uptrend, and there's really no reason to be super concerned. Now, can this stock break down? If it gets below 299, is it coming much lower, likely down to 260, 270? Absolutely, it's probably doing that. So those are some things that you want to keep in mind as an investor. If you bought this at the top, if you don't want to lose your money, if you're close to retirement, if you're up to your eyeballs in margin in your Robinhood account and you can't afford to lose money on some stocks, well, here's your stop loss right here on Facebook, right at about $300. Me personally, I think that's where you step in and buy this one. But right now, this stock is locked in an uptrend. There is no reason to really be super concerned. Now, moving on to Apple, this stock is doing something a little bit different than what we see with Facebook. This stock is just creating a base up here at a higher level of consolidation. For the longest time when we did these FAANG stock recap show, this stock was basing between about 138 and 148. And we talked for weeks and weeks and months that once it broke above 148, that could be the potential to create a higher base. And that's exactly what happened. It took a while. There's a lot of candles between 148 and 168, but now Apple is now basing up here between about $168, $169 per share and about $182 per share. Okay, we can even strengthen this line down here, make it maybe a 2-point. This is a pretty firm level of support down here at 169. The stock right now is trading about 173. If you like it down in this range, I don't mind it. And the same, I'm talking out of both sides of my mouth, okay, because some of you again might be up to your eyeballs in margin, might be closer to retirement, might not just want to lose. It feels bad to lose money on stocks. Well, here's your stop loss right here. I would drop it down. Okay, where I'm shouting out, the levels I shout out are kind of a hard level of support. If I were to set a stop loss, I wouldn't want to sell it on a wick through. See how these candles create these little wicks? Okay, you don't necessarily want to sell it on that. Okay, so if I were to set a stop loss with Apple, I'd probably come down here about 165. okay? Because I wouldn't mind if this stock came down to 165 and then bounced again. So that's where I would be with Apple. Moving on to Amazon. This one, look, it's a broken record. It's in sideways consolidation. I put a big green line down here at about 29.16. That is a hard level of support down below. We've got very, very strong resistance up about 35.20 on this one. I believe we are very smack dab at a very firm level of middle support. You see this stock has actually bottomed out numerous times over the last several months. Right about where the stock is right now at about $3,240 per share. If Amazon does not hold this level, you're likely coming a little bit lower. I think you create buying opportunities here. What we're looking for with Amazon is to pull an Apple probably at some point next year, eventually break to the upside and then create a new base. Okay, so we're looking for that at some point with Amazon. It hasn't materialized. Really, you're far away from the upside though. Okay, and look, this company is reporting earnings on February 4th. Apple is reporting earnings on January 27th. Facebook is reporting earnings on February 2nd. So we've got earnings right around the corner, and those are the types of things that can boost these stocks. Now, moving on to NVIDIA, this company is reporting a little bit later than the rest of FAANG. They're reporting on February 18th. Now, this company, again, I had some questions about NVIDIA. What's going on with NVIDIA? Look, nothing is going on in NVIDIA that really has me concerned at all. We are locked still in this uptrend. This line right here, which I'll make a little bit thicker so you can see it really well, this uptrend is still intact. Yes, we're pulling back. Yes, we broke through an area of support right here that was at 274, but really all we're doing is we're kind of filling these little gaps. So there was a little gap right here, so we filled that. Now we've got another little gap down here. Wouldn't surprise me if the stock comes all the way down here and fills this gap. If it does it very quickly, wouldn't have me concerned. This uptrend is still likely intact. It's really what you really need to get down. I mean, we are in a downtrend with NVIDIA shorter term, okay, right? Because we've got a lower set of lows and a lower set of highs. We are in this downward channel, but we're about to butt our heads up against this longer term uptrend. So I'm watching NVIDIA very closely because really, I think for this trend to be broken, I think you need to get solidly below this line. Okay, we need a candle below this line. The other spot I see here is we've got these, the previous areas of highs are right here at 230. I actually think you need to get below that solidly because you can move these trend lines around, okay? This thing can move, it can flatten out. It's not, these aren't set, none of these lines are set in stone, but especially these ones that go more vertically, they are definitely not set in stone, and I tend to move them around as time goes on. It's really these horizontal supply and demand zones. These are the ones you don't want to break, and I would not want to break 230 on NVIDIA. You break 230 on NVIDIA, and it is probably coming down to the 180s, honestly, and that could create a great buying opportunity, but we're monitoring NVIDIA very closely in the coming days and weeks ahead as they move into earnings season. It could be that some of the other tech stocks move this from an earnings perspective as well. We'll see how NVIDIA holds up. It's approaching critical levels. Now, I had some people on Instagram, and look, you can follow me on Twitter and Instagram. Links are in the bio below. I had some people reach out to me that they said they bought the dip on Google, and boy, they got it, and they got it at a great price. I've got this green line down here. This is a hard level of support down here at about 2670, and I had some people show me their trades. They bought it right here because this is the level that we've had marked out on this channel for the longest time, okay? Google was in this monster uptrend, and now uptrends get broken. This one got broken, okay? I'll highlight this line maybe a little thicker. So this uptrend was intact for the longest time, for like basically a year on Google, and then it got broken. And then what I talked about is now we're going sideways. So just because one of those uptrends get broken, it's not necessarily the end of the world from a technical perspective, because now you could start basing sideways like we've seen Amazon doing, and we're seeing evidence of Apple doing as well. The stock is just now going sideways. The range is between about 2670 and all the way up to here about 3000. If you want to trade this, if you want to buy the dips down here, I don't have any problems with that. Google is reporting their earnings on February 2nd. Moving on to Microsoft, this one, just like Google, tagged our hard level of support, which was the previous highs. That was at about $304 per share. I stepped in and bought Microsoft multiple times this week, which is not something, obviously, anybody that's been a fan and a viewer of the show knows that I do very often. Number one, I want to explain that it's not that I love Microsoft any more or less than any of these companies. Just in my personal situation, I was actually underweight this name compared to Apple, compared to NVIDIA, compared to Amazon, compared to Facebook, compared to Tesla. I didn't have enough of this name. Now I'm about equal weight. Everybody except Apple, NVIDIA, and Amazon are my top 3 holdings. That's not an endorsement to say you need to go out and get that, because I had bought those companies such a long time ago that I'm overweight because the stocks have ran so much. It's not because I put in a bunch of money to begin with. Maybe with Amazon, it's slightly different because the share prices are so expensive. I have put a large percentage of my net worth into Amazon, but I was underweight Microsoft, so I was underweight Microsoft. I came in here. This was a critical level at 104. I came in here and bought it. Do I think this level is just the absolute stone cold bottom for Microsoft? No, because let me zoom Microsoft out for you. And this trend line goes all the way back to 2019. I'm actually going to strengthen this trend line so you guys can see it. So this blue trend line, you can draw it in here and go back all the way like 2 or 3 years basically on this stock. And we're still well above it. So it wouldn't surprise me, quite frankly, if Microsoft can break through the highs that we made, the previous areas of highs where I bought the stock at about 306. Wouldn't surprise me if we actually break through, okay? As long as we don't really solidly break through this trend line right here, we come here and meet it, maybe we wick through it, we get down to about 290, 280 on this one. I wouldn't really be concerned. I would get concerned if we broke through these lows right here. Okay, that's about $280. You break through this area right here, you'll have taken out. So you have along here, you have higher lows. I mean, yeah, you have the pandemic kind of crash that was induced by the market, but you have higher lows forever on this one. Okay, even what we're making right now looks to me like a higher set of lows. But if you take out the previous set of lows, well, look out below. You're probably coming down to about 230, 240 on this one. That would also be a buy the dip opportunity. But I did look, when stocks make this move, Microsoft was at 340 and it comes down to 300. It's not easy to come in here and buy this. It's really easy to buy stocks at the top, which is what most amateurs do. It's actually hard to buy these things when they're down 30, 40% and to come in here and step in here and buy. But the reason why we do that is Microsoft is reporting their earnings on January 26th. So we're really close, 12 days away on this one. We couple our knowledge on our quarterly videos. I talk about the cash. I talk about the fundamentals. I talk about the gross margins. I talk about the net income. I talk about the dominant position that these companies have every single year, and it just gets more dominant and more dominant. We couple that knowledge. Okay, just because a stock goes from 340 down to 300 and it hits a technical level doesn't mean you need to buy it. But when we're talking about the quality and the absolute sensationalness when it comes to Microsoft financials, absolutely you step in there and buy. I mean, it's a no-brainer in my opinion. Moving on to Tesla. This one is just like all these other stocks. This one goes back to an uptrend starting back in March of 2020. So we're nearly on a 2-year uptrend with Tesla. Now it blows up. This stock blows up over its uptrend, then comes crashing back down. We saw another blow up. It's coming back down. I am not at all concerned about Tesla. Even if we were to break through our previous levels of high, which is right here at about $890 per share, wouldn't be super concerned. Again, this line right here, if we need to pull back to this trend line right here, which I'll strengthen just a little bit, we're really looking for this upward trend line to hold, okay? And as long as time goes on, the more time that goes on, look, the higher and higher Tesla can go. You start making pullbacks like this, well, the pullback is now to $1050 instead of, $800 or $900, which it would have been several weeks ago. This stock, like the rest of them, are pretty much still locked in uptrends. Keep that in mind when you watch the market is crashing. I sold all my stocks. Look out for the Fed. The CNBC's got the red market turmoil banners on, and they're doing special edition shows after Jim Cramer, and everybody's scared. Tesla's locked in an uptrend. Microsoft's still locked in an uptrend. Google's not locked in an uptrend anymore, but it's sideways consolidating, which is no big deal. NVIDIA's in a shorter term downtrend, but longer term still locked in a very strong uptrend. Amazon has just been trading sideways. If we broke down below this, that would have everybody concerned, including myself. That has not happened. Apple's in a mega uptrend. I mean, that thing is huge. And Facebook is still in a mega uptrend. Nothing at all has changed. Always take a deep breath when other people are panicking, when they're talking about rates, they're talking about the Fed, when the market moves 1 or 2% in a day and it looks really bad, just remember, these stocks are locked in an uptrend until they take out the previous lows. Nothing at all has changed. And we're on the eve of earnings for all these stocks, and we started earnings today on the channel with bank stocks. We'll continue that for the rest of the month and into next month. We'll have lots of videos. I want to thank you all for your support and your viewership. Thank you very much. It means so much to me. Happy New Year, and we're going to get things going here on the Investor Channel. Thanks for tuning in today. Good luck with your investments.